All right, so today we're going to be doing a deep dive into something that, as a seasoned GameStop investor, you're going to be intimately familiar with, and that's the current state of play for GME.
Okay.
But we're not just talking about the company itself,
Yeah.
right? We're going to be talking about the whole ecosystem surrounding it, recent market moves,
Yeah.
the whispers from the super strong community,
Yeah.
and what it all means for you,
Yeah, for your investment.
for your investment, exactly.
It's a very complex landscape for sure.
Oh, absolutely.
But I think we can pull out some very valuable insights from what you've provided here today.
Absolutely. We're going to be pulling from some articles on AI stocks, the surprisingly quiet trading day that GameStop had recently, and of course some juicy discussions from Superstonk.
Right.
So to kick things off, we've got this news about Ken Griffin's Citadel hedge fund and their massive sell-off of NVIDIA stock,
Right.
a whopping 79% of their stake.
Wow.
Now, you might be thinking, what does this AI chip maker have to do with my GME investment? But trust me, it's more connected than you might think.
Oh, it is.
Yeah.
Because if you remember, back in 2021, Citadel was one of the funds that was heavily associated with shorting GameStop.
Right.
And so their actions, especially when it comes to large sums of money, can be a really valuable clue as to their overall strategy and their financial health as well.
It's like trying to predict the next move of a chess grandmaster.
Yeah,
right?
exactly.
You have to analyze their past moves, their current position, and their potential vulnerabilities.
Yep, their vulnerabilities.
So why the sudden NVIDIA dump?
Yeah.
Is Citadel losing faith in AI as a whole?
Not necessarily, competition in the AI chip market is fierce.
Right.
There's new players emerging all the time.
Sure.
And there's also been, significant insider selling of NVIDIA stock lately, which, could indicate some internal concerns about the company's future prospects.
So maybe a bit of both.
Yeah.
Concerns about NVIDIA specifically and broader anxieties about the AI market potentially overheating.
Exactly. But what makes this even more intriguing is that Citadel didn't just, sit on that cash.
Right.
They immediately pivoted and significantly increased their stake in another AI-focused company, Palantir Technologies.
Palantir, the data mining powerhouse with those deep government contracts.
That's right.
They've got Gotham for intelligence analysis and Foundry for commercial applications.
Yeah.
So Citadel dumps the seemingly popular kid on the block
Yeah.
and goes all in on the more enigmatic player.
Right.
What's the takeaway for a GameStop investor like yourself?
Well, for starters, I think it suggests that Citadel still sees immense potential in the AI sector,
Okay.
even if they're shifting their bets within that sector.
Interesting.
The question is, why Palantir specifically?
Good question. Is this a short-term play? Or are they signaling long-term confidence in Palantir's unique position in the AI landscape?
Well, it's worth noting that Palantir, while having a potentially irreplaceable role in AI with its government and commercial platforms currently, has a very high price-to-earnings ratio, which could indicate overvaluation. So they may be betting on a quick gain rather than a long-term hold.
So how does all of this connect back to GameStop?
Right.
If Citadel is making these big AI bets, what does it tell us about their potential appetite for risk when it comes to a volatile stock like GME?
That is the million-dollar question, isn't it?
Right.
It's hard to say for sure, but it's definitely something that seasoned investors like yourself should be considering.
Absolutely.
Very carefully.
Yeah.
One potential angle to consider here is the sentiment that we're seeing emerging on Superstonk.
Okay.
This idea that GameStop investors are playing a different game altogether.
Okay.
It's not just about GameStop's success as a company.
Right.
It's about the potential failure of those who are heavily shorting the stock.
Right. This casino bet theory that's been gaining some traction.
Right.
The idea that GameStop investors are essentially betting on the market infrastructure itself, holding up long enough for them to cash out any gains from a potential short squeeze.
Precisely. And it's a fascinating concept and one that really highlights the unique dynamics surrounding GameStop as an investment.
Yeah.
But it's crucial to understand that this strategy, while potentially lucrative, hinges on a lot of factors that are outside of GameStop's control.
Yeah, it's almost like a meta bet, right?
It is.
You're betting on GameStop and on the system's ability to handle the fallout of a massive short squeeze.
Right.
It adds another layer of complexity for sure.
And speaking of complexity,
Okay.
let's talk about that record low trading volume that GameStop recently experienced.
Right.
Even lower than May 1st when you adjust for dilution.
Right.
Now, As a longtime GameStop watcher, you know that historically these low volume periods have sometimes preceded big price swings, like
Absolutely.
up and down.
Yeah. It's hard to know what to make of it. Is it a sign of accumulation with larger players quietly loading up on shares, or is it just a lull before the next big storm?
There are a few possible interpretations. It could be accumulation, or it could reflect, a decrease in overall interest with both buyers and sellers, stepping back.
Okay.
It's really difficult to say for sure without more data.
So a classic waiting game then.
Yeah.
But let's not forget that amidst all of this market drama and speculation, GameStop itself is in a pretty solid financial position.
It is.
Large cash reserves, low debt,
Yep.
and a clear commitment to long-term viability.
That's right.
That has to be reassuring for investors.
Absolutely. GameStop's underlying business strength is a key factor here.
Okay.
They've got the fundamentals to weather whatever storms the market might throw at them.
And while we're talking about potential storms, there's been some chatter online about Bank of America's stability,
Right.
fueled by those unrealized losses, and Warren Buffett selling off his shares.
Yeah.
Should GameStop investors be concerned about this?
Well, it's always wise to keep an eye on the overall health of the financial system,
Sure.
as it can impact individual stocks. However, it's important to remember that Bank of America is a massive institution.
Yeah.
And while they have faced some challenges,
Yeah.
they've also taken steps to mitigate their risks.
So probably not time to panic, but definitely worth monitoring the situation.
Exactly. It's all about staying informed and assessing potential risks.
Huh.
Now, let's shift gears a bit and talk about GameStop's potential for growth, specifically in Europe.
Right. The super stock community has been highlighting the untapped potential of GameStop EU's online store.
Right.
There's a lot of buzz about how improvements to the user experience features and navigation could unlock significant growth in that market.
It's a smart strategic move for GameStop.
Okay.
Expanding their international presence could diversify their revenue streams and make them less dependent on the U.S. market.
Plus, the European gaming market is huge, right?
It is.
There's a lot of room for GameStop to grow their customer base there.
Absolutely. And with the right investments in their online platform, they could capture a significant share of that market.
Okay, so we've got Citadel making big moves in the AI space.
Yeah.
This casino bet theory playing out record low trading volume whispers of potential banking instability, and GameStop making strides in international expansion. It's a lot to process,
It is.
even for seasoned investors like yourself.
For sure.
But there's one more fascinating theory that we need to unpack, and that's the one about DFE, also known as Roaring Kitty,
Yeah.
and his connection to Chewy.
Ah, yes. The theory that suggests that DFE might be strategically leveraging his holdings in both GameStop and Chewy
Right,
to create those FTD's failure to delivers,
right.
potentially putting even more pressure on those who are shorting GameStop.
Exactly. It's a bit of a head-scratcher, but the super stonk community is buzzing about it.
Well, the theory hinges on the fact that both GameStop and Chewy are part of the same ETF,
Right.
the SPDR S&P Retail ETF.
Ticker symbol XRT.
And during certain periods, like ETF rebalancing the prices of those two stocks can become correlated.
Okay, so the theory goes that by strategically timing his trades in Chewy, DFV could potentially create a squeeze on that stock, which could then spill over into GameStop via that ETF connection.
Precisely. It's a clever idea.
Yeah.
But whether it's realistic or just wishful thinking is up for debate.
It does seem a bit like one of those too good to be true scenarios.
It's certainly a bold theory, and one that relies on a lot of assumptions about market mechanics and DFE's intentions.
Okay, so we've got this fascinating but speculative theory about DFE,
Yeah.
and we've got GameStop making strategic moves to grow their business internationally.
Right.
But let's circle back to that casino bet theory for a moment.
Okay.
It's clear that many GameStop investors are playing a long game here, betting not just on the company's success, but on potential reckoning for those who've been shorting the stock.
Right.
But as we discussed earlier, this strategy hinges on the market system itself not collapsing.
Right. That's the inherent risk with this kind of play.
Okay.
It's a bet on a controlled demolition, hoping that the building comes down without taking out the entire neighborhood.
But wouldn't a market meltdown be bad for everyone? Wouldn't even the short sellers lose out in that scenario?
In theory, yes. A systemic collapse would be devastating for the entire financial system,
Right.
and no one would emerge unscathed.
Yeah.
But the underlying assumption of the casino bet is that those in power,
Okay.
the institutions who benefit from the current system, would do everything in their power to prevent such a collapse.
Even if it means bailing out those who made bad bets.
That's the cynical view.
Yeah.
But it's not entirely without merit. We've seen this play out before.
Right, like in 2008. So it's a high-risk, high-reward scenario.
It is.
But let's step back for a moment and look at GameStop itself again. As you mentioned earlier, the company is in a strong financial position.
Yes.
They've got cash, low debt,
Uh-huh.
and they're making moves to expand internationally. Does this suggest that even if the casino bet doesn't pay off, even if there's no massive short squeeze, GameStop could still thrive as a company?
Absolutely. GameStop's transformation over the past few years has been remarkable. They've gone from a struggling brick-and-mortar retailer to a company with a strong digital presence, a loyal customer base, and a clear vision for the future.
So even if the whole market goes sideways, even if the casino burns down, GameStop could still be standing strong, maybe even stronger because of the steps they've taken to solidify their business.
That's the optimistic outlook, and it's one that I find quite compelling.
Okay.
It's about recognizing the value of GameStop as a company,
Right.
independent of all the market noise and speculation.
Yeah.
But we can't ignore the fact that those external factors,
Sure.
the actions of other players like Citadel, the overall health of the market,
Right.
all of that can still have a significant impact on GameStop's trajectory.
Okay, so we've covered a lot of ground here. We've got the fundamentals. GameStop's business is solid. They're growing. They're expanding. Then we've got the market dynamics, the short squeeze potential, the casino bets, the volatility. And on top of all that, we've got these fascinating players like DFV, Citadel, and even Warren Buffett, all making moves that could ripple through the system. This is a lot for any investor to keep track of.
It is, and it's why staying informed and understanding all the multiple layers at play is so crucial.
Right.
There's the game itself, the players, and then the rules of the game all interacting in very complex ways.
And sometimes it feels like the rules are changing right in front of us. But that's what makes it so intriguing, right?
It does.
It's like a real-life financial thriller
Yeah.
with twists and turns at every corner.
Indeed, and while predicting the future is impossible,
Right.
analyzing the past and understanding the present can give us very valuable insights into what might lie ahead.
Okay, so we've talked about Citadel's pivot from NVIDIA to Palantir, the casino bet theory surrounding GameStop, the record low trading volume, the potential of GameStop EU, and the intriguing theory about DFE and Chewy. Now, I want to circle back to Citadel's move because I have a theory about what it might signal, and it could have major implications for GameStop investors. Are you ready for this?
Always.
Okay, so we've got Citadel, a major player in the whole GameStop saga, dumping NVIDIA and going all in on Palantir.
Right.
Now, what if this signals a shift in their overall market outlook?
Okay.
What if they're sensing an impending market downturn, maybe even a full-blown crash?
That's interesting. You're suggesting that they're positioning themselves defensively.
Exactly. Think about it. NVIDIA, while a powerhouse in AI, is still largely tied to the tech sector's overall performance.
Right.
But Palantir, with its deep roots in government contracts and data analysis, that's a different beast altogether.
You're saying that they're betting on Palantir's resilience in a potential market meltdown.
Yep.
They're looking for stability and potentially even profit during a period of widespread losses.
Precisely. And if that's the case, wouldn't it make sense for them to also reassess their GameStop position?
Mm-hmm.
Holding a massive short position in a stock that could skyrocket during market volatility, that would be incredibly risky if they're anticipating a downturn.
It would certainly go against the grain of a defensive strategy.
Right.
You know, GameStop tends to thrive when the broader market falters.
So connecting the dots here, Citadel pivots to Palantir, potentially hedging against a crash. They're holding a massive short position in GameStop, a stock known for its unpredictable moves, especially during market turbulence. Does this add up to a potential shift in their GameStop strategy?
It's a compelling theory if they're truly anticipating a significant market correction. Logic would dictate that they reduce their exposure to such a volatile asset.
As a seasoned GameStop investor, this is something you need to be aware of. It's another piece of the puzzle, another factor to consider as you navigate this complex landscape.
The GameStop situation has always been about more than just the company's fundamentals.
Right.
It's about understanding the motivations and potential actions of those who are heavily invested on both sides of the trade.
Right. It's a game of chess where the players are constantly adapting and the rules can change at any moment.
And in this game, knowledge is power. Staying informed, analyzing the data, and even engaging in informed speculation can give you an edge.
So as we wrap up this deep dive, let's recap the key takeaways. We explore the implications of Citadel's move from NVIDIA to Palantir and what it could signal about their broader market outlook and potentially their GameStop strategy. We discussed the casino bet theory and the risks and rewards associated with that approach. We also highlighted the importance of GameStop's underlying business strength, their international growth potential, and that intriguing, albeit speculative, theory about DFV and Chewy.
Remember, the GameStop saga is a multifaceted story with constantly evolving dynamics. Stay vigilant, keep learning, and never underestimate the power of informed speculation.
And that's what the deep dive is all about, giving you the tools and insights you need to navigate this ever-changing world of investing. Until next time, happy investing.